Hi, this is James Shugg with Westpac London's end of day report for Friday, December the 16th. Well, I actually prepared on the Saturday. Lost my voice yesterday. Look, the European story remains very much the focus. In the early part of the session, actually, we did see a temporary spike in optimism when Jean-Claude Juncker, who runs or chairs the ECOFIN, the European Finance Ministers group, said that he thought they'd make their December 19th deadline in terms of putting in place the arrangements for Europe to fund a loan to the IMF, which in turn would then be used to bail out other members of the Eurozone economies. However, just an hour later, the Bundesbank said that, for its part at least, it saw no reason to rush on making a decision related to that, and so that optimism abated within the hour. It then turned worse from there with the ratings agencies coming out. I mean, I'll run through the various actions there. So we had Fitch announce that France's AAA rating with stable outlook is now a negative outlook on that AAA rating. They also put Spain, Italy, Belgium and 3 of the smaller Eurozone members on review for downgrade by the end of January. Fitch basically argued that there's just no comprehensive solution that can technically and politically be found in Europe. Moody's, after the market closed, actually downgraded Belgium. And S&P have warned that the economic contraction that is now widely expected in Europe could be particularly deep in Germany, and also mentioned 4 of the smaller members like the Netherlands, Belgium, Austria, and I think Finland it was. So different announcements from the various agencies, but nevertheless all of them weighed against the market. And so at the close, we saw in European markets the FTSE was down 0.25%, the French market was down 0.9%, and the German market was down 0.5%. But we also had figures which showed unit labour or employment labour costs in Europe fell from their peak in the second quarter, much slower annual pace of increase in the third quarter, and that pretty much corresponds with the turnaround in the labour market, with unemployment now rising in Europe. In the US, the data flow that we saw was was just the inflation figures really for the month of November, 0.2% rise in the core rate, but the headline rate was flat with quite a big fall in energy prices coming through. It's interesting, on various measures of inflation, we've seen some better results come through of late. I'll just give you some numbers here. If you look at 3-month annualised headline CPI in the US, in the 3 months to August, it was running at 2.6, running at only 0.8 in the 3 months to November. And for the core CPI, the equivalent numbers are 2.9% in the August quarter, 1.5% in the 3 months to November. And the PPI core rate we saw yesterday too, on Thursday, was much softer, with the last 4 months showing a pretty much zero trend in the core measure of factory gate prices. So we're getting the case building, and the Fed's acknowledged it in its most recent statement in terms of the more benign inflation outlook, which will make it easier for the Fed to embark on another round of quantitative easing, should they think that the economic performance of the economy justifies that. Other data, we had European trade surplus, back-to-back trade surpluses in Europe, first time since 2009. However, exports were down very sharply both in September and October, and that's a reflection of one of the many problems that Europe is facing at the moment. The war, just on ratings too, I should have mentioned, the war of words between Britain and France in particular has really hotted up, with the senior French officials saying that Britain should lose its AAA rating before France should, and Britain trying to give as good as it can back. So a bit of a spat there emerging at a time when really it isn't needed. That's about it in terms of events. I'll just run through some other market numbers for you. The Dow closed unchanged on the day at 11,866. The S&P was up 0.3%. it had been much stronger earlier in the session. US markets actually opened quite positively, but all this rating stuff in Europe pulled markets down towards the fairly much flatter outcomes. In commodity markets today, we've got oil prices down 0.4%. We've got $93.53 a barrel. Gold prices up 1.3%, $1,597 an ounce, and copper prices are up about 2% yesterday. This was, of course. Okay, and the Aussie dollar, 99.8 US cents. It did actually temporarily blip above parity briefly on Friday, but when I last saw it, it was at 99.8 US cents. Okay, that's about it. I'll be back next week.